Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at MicroStrategy.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So today is Saturday, February 7th, 2026. And, looking back at the market action from yesterday, there is really only one place to start.
Oh, it has to be MicroStrategy. I mean, honestly, looking at the charts this morning, it's just insane. The stock surged 25%. In a single day.
It's a massive move.
Massive. For a company that, let's be honest, started out making kind of boring enterprise software back in the day.
Right, but to even call it a software company anymore feels a little bit misleading. It's this strange hybrid beast.
A hybrid, yeah.
You've got the legacy business on one hand, and on the other, you have the largest corporate holder of Bitcoin on the entire planet. And yesterday, those two things just collided perfectly.
Okay, but before we get into the whole Bitcoin madness, I really want to look at the Q4 earnings report because there is a number in here that just makes me want to close my laptop.
They reported a net loss of $12.4 billion with a B. How on earth does a company lose $12 billion in 3 months and then its stock jumps 25%? It makes no sense.
It looks terrifying on a headline, doesn't it?
It does.
But this is where you have to sort of put on your forensic accountant hat. That $12.4 billion loss, it's almost entirely fiction.
Fiction. It's right there in the SEC filing.
Well, it's an accounting fiction. It's called an unrealized loss. So under the current rules, MicroStrategy has to mark its Bitcoin holdings to the market price at the end of the quarter. And because Bitcoin was, volatile in Q4.
It dropped.
It dropped. So they had to take a $17.4 billion paper hit on those assets.
A paper hit? So they didn't actually sell any of the Bitcoin?
No, not a single Satoshi. No cash left to build. It's funny, if you look at the quarter before that, Q3 2025, they reported $2.8 billion in net income.
Did the business fundamentally change in 3 months? No. Bitcoin's price just moved around. So smart investors now, they just completely ignore that net income line.
So it's just noise. Got it. But that brings me to the actual business. If they're ignoring the net loss, they still need money to, keep the lights on. Is the software business actually doing anything?
That is the most underrated part of this whole story. The software business is the engine room. In Q4, they brought in $123 million in revenue, which beat estimates by about $4.5 million.
A beat is good, but I'm looking at the year-over-year growth. Total revenue is up 1.9%. That's not exactly impressive.
On the surface, I agree. But you have to peel back the onion a little bit. That headline number looks flat because they're shifting their model. They're moving away from one-time licenses to cloud subscriptions.
Okay. The recurring revenue play.
Exactly. And that segment. Subscription services revenue skyrocketed 62% year over year.
62%. Okay, now that's a serious number.
It is. And that core growth segment, when you combine it with product licenses, is up over 26%.
Yeah.
And this is high-margin cash. Gross margins are sitting at 66%.
So that's the cash that lets them service all the debt they're taking on to buy the Bitcoin.
That's the steady paycheck that allows the gambler to stay at the table. Exactly.
I like that. Okay, so let's talk about the gambler, the Bitcoin hoard, the treasury.
The treasury, yes.
They are now holding 713,502 Bitcoin. That number is just, it's absurd. But here's what I don't get, and I think a lot of people are confused by this. Where are they getting the money?
Right.
It's not coming from the software business, not billions of dollars worth.
This is the secret sauce, or, what some people call the infinite money glitch.
Yeah.
It's all about the premium to their net asset value, or NAV.
Okay, explain that.
So imagine the stock is trading at a price that implies the Bitcoin they hold is worth, say, $150,000 a coin. But the actual spot price of Bitcoin is only $70,000. The stock trades at this huge premium because investors want exposure to the whole strategy.
So the stock's expensive compared to what it actually owns.
Exactly. So what does the company do? They issue brand new shares of their stock at that high inflated price. They sell that stock, take the cash, and go buy Bitcoin at the lower real market price.
Wait a minute. So they're literally selling high and buying low at the same time?
Precisely. It's called accretive dilution. Normally, dilution is bad for shareholders, right? You own a smaller piece of the pie.
Right.
But here, because the premium is so high, the amount of Bitcoin per share actually goes up every time they do it.
That feels like financial alchemy.
It's capital markets arbitrage. In Q4 alone, they raised $5.6 billion doing this. And then just in January of this year, they They raised another $3.4 billion.
So they just printed nearly $9 billion of stock in 4 months and plowed it all into Bitcoin.
Correct. And as long as that premium exists, they can just keep doing this. It's a flywheel.
But that's the risk, right? What if that premium disappears? What if people stop wanting to pay $2 for $1 worth of Bitcoin?
That is the major risk. If that premium collapses, the flywheel stops. Cold. But right now, with the market sentiment being so risk-on, the appetite is just insatiable.
Okay, let's flip to the other side of the balance sheet, the debt. I see $82 billion in convertible notes. That's a lot of IOUs.
It is, but you have to look at the structure. Convertible notes are brilliant for this. Investors buy them because they get some interest, but they also get the option to convert the debt into stock if the price takes off.
Yeah.
It's like a bond with a lottery ticket attached.
So the lenders are happy, but what about the downside? $8 billion is a heavy burden if Bitcoin crashes and just stays down for a few years. Can they survive a crypto winter?
This is why that cash position is so critical. They are sitting on what they call a fortress balance sheet. They have $2.3 billion in cash.
And that's up from what, just $38 million a year ago? That's a huge war chest.
It's massive. And management has been very clear. They have a $2.25 billion buffer set aside just to pay the interest on their debt all the way through 2028.
So even in a worst-case scenario, they can make their debt payments for the next 2 years, no sweat.
Exactly. They have pre-funded their own survival. So that risk of a bank calling them and forcing them to sell their Bitcoin to cover debt, it's basically off the table now.
That's a huge clarification. Okay, so let's get back to yesterday's explosion. February 6th. The stock is up 25% to about 133.
It was a textbook breakout. Bitcoin reclaimed that $71,000 level, and MicroStrategy just acted as the leveraged play on that move.
People always say leverage play. Is that just because of the debt?
It's the debt plus that share issuance mechanism we just talked about. Because they're always buying more Bitcoin, the company gets denser with Bitcoin over time. So if Bitcoin goes up 10%, the stock might go up 20 or 30% because the market is pricing in all that future buying power.
The multiplier effect.
Right. And from a technical standpoint, the chart looks very strong. It bounced hard, reclaiming that $135 support level. It shows buyers are stepping in very aggressively.
I saw Cantor Fitzgerald has a price target of $213.
Yeah, and at today's price, 213 implies about a 60% upside from here. That's a very bullish call. They're betting the crypto revival is real.
And it's not just crypto, is it? I mean, the whole market is rotating into tech and AI. NVIDIA just pulled the Dow past 50,000.
Context is everything. We are in a classic risk-on environment, and MicroStrategy sits at this really interesting crossroads. It's a crypto play for sure, but it's also a software company, so it gets swept up in that whole tech rally.
That gets the tech multiple.
Exactly. When the NASDAQ is ripping higher, MicroStrategy benefits from that liquidity.
But we have to play devil's advocate here. We've seen this movie before. Bitcoin goes on a tear and then the rug gets pulled. I saw a headline about the MSTY ETF collapsing. What was that about?
Ah, yes. The MSTY yield collapse is a really important reminder of the volatility. That ETF basically sells options on MicroStrategy stock to generate income. But when the stock drops 41%, like it did from its peak, those strategies just get obliterated.
A 41% drop. I mean, in any other sector, that's a full-blown crash.
And that is the bear case, 100%. If you buy this stock, you are signing up for stomach-churning volatility. If Bitcoin rejects 70,000 and goes back to 50, this stock won't just go down 20%. It could go down 40 or 50.
Because the premium contracts. The leverage cuts both ways.
Violently.
So looking forward, what are the catalysts? What should we be watching for over the next, say, 90 days?
First thing is Q1 earnings, which will be in late April.
Do we care about the earnings number or just the new Bitcoin count?
We care about the software growth. I want to see if that 62% subscription jump was a one-off. If they show that's sustainable, it builds a much stronger floor under the stock. It proves the whole strategy is working. The business in the front, party in the back strategy.
Pretty much. And obviously, we're watching the Bitcoin price. $70,000 is the line in the sand. If it holds, this stock has a launch pad.
Okay, let's wrap this up. Give me a score. You've looked at everything.
I'm giving it a bullish score of 8 out of 10.
Yeah, an 8. That's pretty confident, given the risks.
It comes down to the moat. There is no other publicly traded company on Earth with over 700,000 Bitcoin. You can't replicate it. If you're a big fund and you want aggressive, liquid exposure to Bitcoin, this is the only game in town.
It's a monopoly on corporate Bitcoin.
It is. And with that cash fortress neutralizing the bankruptcy risk, the risk reward just skews heavily to the upside. You have a floor and you have an almost infinite ceiling if Bitcoin really takes off.
So the elevator pitch is a leveraged Bitcoin ETF that pays for itself and can print its own money to buy more Bitcoin.
That's the tweet. It's a Bitcoin proxy that's designed to outperform the asset itself in a bull market. It really makes you question what a company even is anymore. Is it a software provider, a bank, a hedge fund?
Or is it the world's first actively managed Bitcoin central bank? It might be a prototype for the future of corporate treasuries. It's just the most fascinating stock on the market right now.
A fascinating anomaly. Well, we'll be watching that $185 resistance level very closely.
Absolutely.
That wraps up our deep dive on MicroStrategy. If you enjoyed this breakdown, make sure to hit that subscribe button. We'll see you in the next one.